Hello, this is Michael O'Leary with Buy the Book Taxes with the first video blog in 2021. And it's called The 10 Biggest Mistakes Taxpayers Make When Dealing with the IRS. So here we go. The first one is to automatically file a joint tax return, married filing jointly. People just assume this is the right thing to do. It isn't always. While the tax rates may be lower on a married filing joint return, you have to be very careful if one of the two spouses has the income and one of the two spouses has tax liabilities. If you file joint returns, it can make it much more difficult to get better terms when settling with the IRS. So if there is an existence of prior tax debt, you should consider filing separately, because then they will only look at the assets of the income producing spouse, not the spouse who filed separately. Very important consideration. The second is filing more returns than needed. The IRS defines tax compliance as filing the last 6 tax years. So I'm recording this on January 4th of 2021. So the last 6 years would be tax years 2014 through 2019. In about 3 weeks, once tax year 2020 kicks in, it would be 2014 through 2020. So if you haven't filed a tax return in 10 years, you don't have to file 10 years of tax returns. You just need to file 6. Okay, here's one that most people are not aware of. Filing a return after what's called an SFR is created. An SFR is a substitute for return. If you haven't filed a tax return in 3 years, at some point, the IRS may prepare a tax return for you using the information that has been reported to them. Now, most times, it's better to file an SFR because it'll reflect less tax liability due. But it depends when the SFR is created. For example, the IRS only has 10 years to collect the tax. So if they prepared an SFR for you 9 years ago and the clock is going to run out on the amount for the SFR, don't file an original return. Let the clock run. If they filed an SFR 2 years ago, and by filing an actual return, you can reduce the amount of tax liability you have, then you should go ahead. But don't automatically do it. This should be number 1, not opening the mail. The IRS collection process is nothing more than a series of letters they send you that become increasingly threatening in tone. By ignoring them, you are not availing yourself of appeal rights that the IRS affords you that can enable you to work out an agreement with them. Always open the mail. Number 5, and this follows closely excuse me, along number 4. In one of the escalating letters where they're letting you know that they intend to levy you, on page 2 is a section that you can check a box and request what's called a collection due process hearing. This is part of the IRS appeals process. You should always do this. You don't do it just to needlessly delay the process. That's a bad thing. You do it to give yourself some time to get yourself organized. And when the hearing time comes, you can submit a proposal to the IRS to resolve your tax issues. Number 6, this is an interesting one. If you borrow money from your family in order to try and pay back the IRS, you should have your family file a lien against you and then get on a payment plan with them. This may seem counterintuitive. Why would my family come after me? Blah, blah, blah. But that expense is considered allowable and deductible when doing the calculations with the IRS to determine your ability to pay them. Number 7 is kind of follows with number 6. What you really should do is do number 7 instead of borrowing money from your family. For example, let's say you have an IRA that has $20,000 in it. It's January of 2021. You haven't paid any of your 2020 estimated taxes yet. Take that IRA, have the withholding taken, pay your estimated taxes, and then if possible, do some things that can reduce the amount of money you show as your ability to pay the IRS. For example, you get allowable expenses for the IRS for life insurance. If you don't have any, go get it. If you don't have health insurance, go get it. If you're driving around an old junker car, go get a newer pre-owned car, and maybe that even has a car payment. The bottom line is to reduce your assets and increase your living expenses so that you show less money to pay back the IRS. Number 8, very important, don't pay the oldest tax year balances first. Paying the oldest tax year balances first is a mistake. Pay the most current taxes first. Pay your 2020 estimated taxes. Then, if you have some money left over and you have 2019 or 2018 taxes, make payments to them. You do it by designating the payment. The way you do that, in the memo line of the check you send them, you put the tax year, the tax form, and your social security number. In that way, you are designating how the IRS should apply your payments. Otherwise, they'll apply it to the oldest years first. You want to apply it to the most recent years first and have the clock run on the oldest. 9 kind of follows 8. So the first payments you want to make to the IRS are for the current tax year. The 2 questions the IRS always asks when either you call up or a tax professional calls up on your behalf, the first thing they ask you is the client current on his tax return filings? Has he filed the last 6 years of returns? Hopefully you could say yes. The next question is, have you made your estimated tax payments for the current year? You want to be able to say yes. Don't go back and pay your 2013 outstanding balance if you haven't paid your 2020 estimated taxes yet. And the last, and also extremely important, don't try and do this on your own with the IRS. They're not there to help you. They're not the customer service department. They're going to hold you upside down by your ankles and shake you and try and get as much money out of you as fast as they can. You don't know the rules, process, and procedures they use. You don't know the rights that you are entitled to, like the collection due process hearing, the appeals area. So please, if you can afford to, Hire an enrolled agent, CPA, or attorney who specifically has tax representation knowledge and experience. And if you can't afford to hire one of them, Google low-income taxpayer clinics. They're in every state. They can provide these services to you for free, but it is means tested. If you owe the IRS money and you're getting scary collection letters, please call me. I have a lot of experience in this area. I can help. Talk to you soon.